60-second economics on deglobalisation. Well, this means that countries are trading less in relative terms, investing less across borders and relying more on domestic production rather than integrated global supply chains. And deglobalisation could also involve, and often does involve, tighter labour migration rules and protectionist policies like import tariffs and quotas. And one fact is that the number of trade restrictions worldwide more than tripled between 2019 and 2023. So the key features of deglobalisation include a fall in the ratio of trade to GDP for some nations, the reshoring or nearshoring of production to domestic or nearby markets, the growth of regional trade blocs rather than multinational global trade agreements, and a shift towards national industrial policies, particularly focusing on self-sufficiency. The underlying causes include, obviously, the growth of significant geopolitical tensions, not least the rivalry between the United States and China, the disruptions created by the pandemic, particularly in exposing vulnerabilities in reliance on long global supply chains. And you can't divorce this from geopolitics, the political backlash to the financial crisis, in particular, the rise of political populism and domestic job protection movements. The key takeaway point, I think, is that deglobalisation doesn't mean necessarily the end of decades of expanding global trade, but perhaps more a significant rebalancing towards regionalisation away from globalisation, as long as in addition to the reshoring of production and also changes in the pattern and direction of global investment flows.